What's up everybody, Tom here with another video. Today we'll be talking about the latest stock market news together, along with our technical analysis thoughts on the S&P 500, Nasdaq, volatility index, gold, and the US dollar. The stock market is putting pressure on several key technical resistance levels. The question is, will they be breached this week and we see the end of the corrective dip phase? Or whether the bulls and the bears fight it out and the bears gain control of the stock market again, pushing it further down. Let's take a look together at seeing which one is more likely. Stay tuned. So one of the stories we talk about all the time on this channel is obviously the election. Now we're doing that because it's a big bit of news, and the October month is going to be all about election, stimulus, and of course the Trump news just in general. Overall, it looks like Biden is leading, at least from this poll, from 10 points, as the majority of Americans are supposedly saying Trump could have avoided the virus. Now, this is just a heading, and I think I just want to bring this up to show that previous polls have been very wrong from the results. So just remember that polls are not necessarily giving us the best information out there on who is really winning and who is losing in this election. If we look at the heat map, this is really what we want to be focusing on. What's happening in the market itself? Well, yesterday was all green, all good, with almost all sectors up. If we take a look at the three major indices, that is the Dow, the S&P 500, and the Nasdaq, we can see here that the Nasdaq was the outperforming one, and that makes sense. When we have a bullish day, the one that got really sold off on Friday was, of course, the Nasdaq. But I'll point to an interesting thing, and that was at the end of the day, the last couple of hours of trade, we saw a spike up and pick up in all of the major indices. So there was buying pressure from Wall Street at the end of the day. I say this on the channel again, the close is the most important time. And of course, the last couple of hours of trade really show the sentiment of the market. The first couple of hours, often the retail market, that's where you or I are sitting trading our positions. But the close is generally where Wall Street places their extra positions and sets it all up for the next day. If we're talking about what happened in terms of the sectors, I just want to show everybody a rolling kind of 5-day movement here on the different sectors in the market, just to show you how it's not necessarily the tech that's done that well, but also to show how well the energy sector has recouped since hitting the bottom. So that's things like ExxonMobil and a few other things we've covered in the live streams. They all reached downwards of -7% on the energy sector, and now they're only -2% since, of course, the beginning of this chart. Now, that shows a big recovery, and they all hit some pretty key supports. So it's always worthwhile having a look at the sectors and doing a lot of analysis on the sector, which we'll be doing in the tech sector today in this video. Because when you do that, you can sometimes find very, very nice technicals, and then from that point, break down to the different companies inside of that sector. So energy sector is certainly coming up, and it's done quite well over the last couple of days after hitting some fairly decent supports across the board. If we look at put call ratios across the markets, we're noticing put call ratios came down again, which is good news at a resistance. It makes sense, of course, people buying calls after seeing a nice bullish day. We're at 1.5, so back to the lower range, and this is down from about 1.7. So if you're a bear, it's usually good to see put call ratios actually lower, and that's because the less people that think something's going to happen, the more likely it is that it does happen. Onto our oscillator, still sitting around 40 here. This is the fear and greed over time that takes in so many different reasons. And at this point, still around the 40. It hasn't really dipped down to 20 or under, which is generally that kind of buy level for corrective dips. But at this stage, we're kind of in the middle of nowhere land, and we'll keep watching this over the next couple of weeks. So let's take a look at these charts. What was the story of yesterday? I think it's straight away going to be US dollar. We saw US dollar weaken, and here on the daily chart, you can see it closed down low and really got through that 20 moving average, the red line here. If we go down to a 4-hour, it becomes even more clear that this was a fairly bearish move. Now, where are we right now? We're at the 93.40. I think we're kind of in a nowhere land in terms of very, very difficult to see whether there's going to be support or resistance here. from a line chart, it's pretty clear there was a lot of resistance through this zone, but I think this 93.50 to 94 zone is where, really, if the market can't hold this, it will move straight down to 92.80, where the previous support was, where it had that big bullish movement. And I expect US dollar to maybe further weaken into, of course, the big news this week, which will be, of course, Jerome Powell speaking and the FOMC meeting minutes. So at this stage, we're in the middle of nowhere land. For dollar bulls, you really need it to move up now. I kind of thought that we'd hopefully hold the 93.50. We didn't even bother holding that, but everything's looking relatively bearish. We've got two crosses here with the cross of the 20 and the 50. We obviously have market going back into the channel. The 93.80 was the strong resistance, and weakness on the US dollar across the board could be expected down to the 92.80, where I would expect some buying pressure. So there might be some buying pressure here, but a new low will pretty much force the 92.80. So for now, dollar looks relatively bearish, back into the channel, all of those types of things. So look at this, guys. Look at the VIX. We've been talking about the VIX quite a lot. This is the CBOE contract, and it's always important that we understand and have a look at what's going on this chart. We've got the 25 and the 30 still maintaining body closes on the daily. We go to the daily, you'll see it very clearly. We have not had a body close either way, up or down. We're at a 28 handle here on the VIX, and I'm telling you, it's going to be very interesting to see if we break through the 30 and close. Now, the close is going to be the key for the VIX, as it often spikes like it did over here and then rejects the zone. But if we do have a VIX over 30 this week, expect huge volatility on the stock markets, and often we would expect a spike of the VIX upwards of 35 to complete the channel distance. We spoke about on the weekend, we spoke about in the live chat, very important levels for the VIX here. And of course, 25 being support and 30 being the resistance. So what about Dr. Copper? What is Dr. Copper telling us on the channel? Well, Dr. Copper's stuck right at resistance. Basically, support around 2.95 to 2.96 is still holding copper down. We saw a big sell-off on copper, followed by a bullish recovery, and now we're stuck in the middle of nowhere land. We really want to see what happens next here for copper. Will copper make a new high, get above 2.98 and go back to test 3.05? Or will it break through 2.93? I think it's worthwhile setting alerts for 2.93 and watching copper do the lightning bolt down. Now, we always talk about the lightning bolt. Basically, we would have the peak, the trough, the lower peak, and the lower trough at that point. If that happens, further weakness back down to the lows for copper, and that would be quite bearish sign for stock markets. So for stock market bears, you really want to see copper start to fall over here and start to find resistance and selling pressure. It's very, very important that it does so, as it could be one of the last lines of defense for, of course, the bears. And we'll talk about the S&P 500 in just a moment. On to gold. What's happening here? I've been requested gold a few times. I said this in the live stream on the Monday bell, that pretty much 1920 is the key zone for gold. We expect bullish pressure to 1920, and it could have selling pressure here. We had a lot of support on the 4-hour bodies at 1920. So I think 1920 is the resistance zone. If it breaks and closes above that area, what you're going to see is bullish movement on gold, and it could very quickly get up to the 1950, 1960 zone. 1920 is really all I've got on the charts right now, and I'm looking at it because from my perspective, if it gets through that zone, it becomes a pretty strong buy, and that's because we get through all of these body closes across here. Depending on the data, you'll actually have a body close right here as well. This is O&A data. It's a little bit different to other 4-hour closes, and 1920 breaks through. We're also getting through probably a 200 4-hour at the same point. So I think this is the sentiment changer here. If we reject and sell off, then further selling comes into gold. And if we get through the 1920, you would think there's further buying on gold up to the 1950 and 1960 levels. Let's now take a look at the Nasdaq. What are we seeing on the Nasdaq, guys? Well, it's the same level, 11,600. 11,600 resistance still maintains to be the most important area. Now, I've seen a few people mentioning, do we have a head and shoulders set up on the Nasdaq? Do we have a head and shoulders set up on the S&P 500? So what they're saying is, there's the left shoulder, here's the head, and here's the right shoulder. And they're basically saying it's like an angled head and shoulders. Now, that's fine, but just remember, we don't usually want a right shoulder ever to be bigger than the left shoulder. The idea of these types of things is the left shoulder should be higher than the right shoulder. The reason why, if the right shoulder is higher than left shoulder, it's not showing us bearish intention on the market. It's not showing us that the market is very weak and that people are keen to get in on the bear side. A smaller right shoulder always is very helpful in terms of diagnosing market psychology. So I think you could draw this and you could still call it one just from this point here, but we need to see a lot more further selling pressure before it even gets back to the neckline. And at this point in the Asian futures, we're basically down slightly after the market close, about 0.22% at 11,460 handle. For me this week, it still remains that we've got horizontal resistance at the 11,600. This remains an incredibly big key area between the bulls and the bears. If we get through 11,600, we've basically got green sky or blue sky above, very little market structure holding us back on the right-hand side. And I would expect movement up, movement down, finding previous resistance as support, and then further bullish momentum up. That would probably really signal the end of the corrective phase unless we're in some giant bull trap, and overall the movement to a new high, or at least going and testing previous highs. From the bear side, we're still looking at this 11,200 zone. We need to see it move down and close through. Not only would that form a pretty ugly head and shoulders, but on top of that, we'd be getting through the key support, key resistance lines. And you can see this area has been body closed a lot on the 4-hour futures. So 11,200 still key for the bears, and 11,600 still key for the bulls. Sometimes you're in a zone, and right now we're certainly in a zone on the Nasdaq, but it's moving quite fast either way. And for now, it must start to short off very, very soon for it to complete certain patterns and of course show us bearish intent. Let's take a look at the XLK. Let's take a look at the technology sector and break that down. We haven't been doing that this much, but I want to bring this into our analysis on the channel just to show you how doing one bit of analysis on a sector chart can help us decide on what we're going to do on that entire stock market sector, what we're going to then look for and whether there's opportunities. Well, first I want to talk about this structure here on the left-hand side. We had a whole bunch of resistance that acted as support around that 110 level. 110, it's a $10. It obviously means quite a lot to this particular sector. Then we saw a double bottom here on the smaller time frame, followed by the follow through, the retest, and of course, now we're testing the resistance. So really, it looks very similar to the Nasdaq, and that's because the Nasdaq is made up so much of tech. But overall, very, very nice technicals here. A 2050 cross, followed by dynamic support from the 2050. We're about to put technical resistance on here. And what may happen is we might see a closeout, and the reason I brought it up, of XLK, where the market might close high, show us a bullish signal, and it may happen before a Nasdaq, it may happen before an S&P 500, and it may not be a fake out signal. So this type of thing is we're putting resistance pressure on the 118. 118 seems to be the key zone, and if we break up, I expect it to go to 120, come back down, find previous resistance as support, and then hopefully bull off to the 128, if not 124 zones. So at this stage, we're still stuck in a range, but you can see it was a very technical chart, and it's worthwhile bringing the sectors onto your charts indeed. So let's take a look at our favorite, the S&P 500. Specifically, we're going to be looking at the SPX. Remember, this is the real chart, not the US futures. We want to always try to use the real chart whenever possible. And we've started putting pressure on a very key resistance zone. We're also about to see a 2050 cross on the real market's moving averages. So we'll put the horizontal on straight away. Let's take a look at this horizontal chart. We've got here the 3420. What a great zone. Very strong resistance. We're about to put pressure on that. And I would expect that this level has bulls and bears kind of taking profit for the bulls, and obviously the bears trying to push it down. This is really the area that we've been talking about critically for the last couple of weeks. If it just blasts through there, again, like the Nasdaq, we expect it to blast through, close, come back down, retest, and that really gives us the go signal for further movement up. So the corrective phase is very close to being over here in the markets. We're basically at a point where we expect the bears to start to gain control of the markets, and they won't want to be seeing a 2050 cross. That's for sure as well. So 2050 cross, important point. It usually happens before key resistance, so that's pretty normal. And at this point, we need to see selling pressure coming into the markets on Tuesday. Will that happen? Time will tell. We obviously have the Fed, of course, coming out a little bit later this week to make a move on the markets. From the bear side, if we do see further selling pressure, we'd probably expect the previous highs over here of 33.88 to act as some kind of support if it started selling off. But really, the key level still remains at 33.20 to 33.30 zone. A break close below there, if we get this line, we bring it down, you'll all see very, very clearly that this would be bearish intent back down to the 3200. So we're at the resistance, very, very close now to seeing what we should see, which is bearish pressure come back into the markets. And if we don't have it here, I would say that the corrective phase is pretty much over. A few people are calling this a massive inverse head and shoulders with the right shoulder. You could be looking at it that way, and certainly a break above 34.20 would be bullish indeed. So S&P 500 is at a critical point. It often reaches these zones, and then we have to wait and see. But when confirmation comes in, we need to go with, of course, the price action and the trend overall. So just a quick reminder, this week we have a whole bunch of news coming out. We've obviously got Fed Chair Powell speaking, 1:40 a.m. AEST time. Make sure you use Forex Factory or another calendar. Set it for your time frame so you know when it's happening. And then FOMC meeting minutes on Thursday, October 8th for me. And that, of course, is another important event. It'll be different depending on where you are in the world, but these are always important zones and things to think about if you're trading the stock market. We hope you enjoyed this video today. If you did, remember to subscribe and of course hit that bell and give us a thumbs up, and we'll see you in the next video. Quick shout out as well to everybody out there. Been amazing support in the live streams. Loving doing the Monday Bell. We'll continue doing that, and obviously any other major news announcements during the week, such as non-farms like last Friday. So thanks for the support, and we'll see you in the next video. Bye for now.